These are the hottest sectors that you should be watching for, according to our next guest, Howard Marks, CEO of StartEngine. Howard, welcome back to the show. It's a pleasure speaking with you today.
Thank you. Pleasure to be here.
What investors would like to know is that given our changing economic landscape and political landscape, what are the sectors and asset classes that are most likely to benefit from not just our current economic situation, but a new administration in the White House?
Well, my opinion is this. Entrepreneurship is still a very good area for investment. Anything that has to do with technology. I think green technology, which includes solar energy, renewable energy, electric cars, are going to take a big boost through the new policies that the administration may have. Because in many ways, people are looking at the future, and the future is a cleaner type of energy, cleaner type of transportation. So I think those are one areas. And then the technology has shown in this pandemic area an incredible amount of, I would say, growth because of new behaviors. The pandemic in many ways has accelerated the future, and that acceleration is shown in those stocks. And those are, of course, the big, large cap technology stocks.
Earlier this week, when the announcement that Pfizer's vaccine is 90% effective, we saw a lot of stocks in the tech sectors, in particular, fall, like Zoom, Netflix, Peloton, the fitness stock. A lot of these work from home culture stocks have fallen on the news. The assumption here is that as we have a vaccine, people will get out more again and stop using these work from home services. Do you agree with this assumption?
No, I don't agree with the assumption that it's all or nothing, that people are now going to go outside and not use these technologies. I think there's a correction that happened because there was a lot of speculation on these companies. That speculation may have gotten a little bit out of hand, frankly. And now that people are sobering up and saying, okay, look, people are still going to be using things at home, and they're going to have that new behavior of home, working from home. That's going to continue. Not that they'll be at home all the time, but some more at home culture, working culture, and that is not going away. In fact, the pandemic in many ways has accelerated what would have happened 5-10 years later, which is, yes, flexible workplace, flexible gym, flexible everything. For example, I have a Zoom 3 times a week where I work out with a trainer. I'm going to continue that.
Okay, let's take a look at this chart from the Census Bureau here. It shows third quarter business applications, and you and I talked about this chart offline. This is a huge increase from anything we've seen in the last 15 years. The chart goes back to 2005. Why such a massive increase this past quarter during a pandemic?
Well, here's my thesis on that. I think a lot of people lost their jobs during the beginning of the pandemic. I think there was a trend to lay off a lot of people, especially from big business and also the small companies like restaurants and all of these. This generated an opportunity for people who are at home to say, should I pursue my dream today? Is this the right moment for me to be an entrepreneur? Or is this the right moment to start my business? And that, I think, has created an extraordinary increase in interest in being self-employed. And that could be as simple as being a consultant or independent worker, or even just being a small business. And I think you will see a lot of those businesses actually emerge out of the pandemic and flourish.
Well, do you see any challenges to entrepreneurship right now? It's a difficult time to be starting a business when everyone's, operating at not max capacity. There's talk of another lockdown coming. As the resurgence of COVID hits the country and around the world. We're already seeing that in Europe. So do you think now is a good time to be starting a new business, Howard?
I think it is a great time. And look at the Great Recession in 2007, and you have companies like Facebook that emerge out of this. I think it's a great time. And the reason it's a great time is because of disruption. The pandemic in many ways has disrupted our landscape. People are consuming differently, as we discussed. So I think a great time to start a business is in a time of crisis. You have to be efficient, and you need capital, and be efficient with your capital. Now, how do you get capital? That is basically what we do, is we provide capital for entrepreneurs.
Yeah, we're going to talk about your new platform in just a minute. It's a very exciting new platform. Let's go back to the businesses now. What types of businesses do you think people should be starting right now? Because not all businesses will do well. For example, I probably wouldn't be starting a restaurant business right now if I were given a loan.
Well, you may start a ghost kitchen business where you rent out a kitchen to chefs and people who can deliver food. Certainly, you may want to do that. I would say the best time today to start a business, it is an amazing time, is to look at our economy and our trends. And basically, people want convenience. People want artificial intelligence. They want robotics. They want renewable energy. They want all of these new technologies, those gadgets. I mean, Apple is fascinating how they keep introducing new technologies. People are going to use those technologies. They're going to build apps, software that no one has ever imagined. That is where an entrepreneur should focus on. These niches that are emerging out of this pandemic. There are extraordinary opportunities, and they should consider them carefully. Now, how to discover those? Look around you. Look at what people are doing now differently than they did before. Look at how they're buying things.
Let's play a quick game now. It's a challenge round, or a speed round, should I say. I'm going to give you some sectors, some of them we've already talked about, and just say whether or not you like them, like or dislike. You can provide a reason if you like. So starting with the first one, electric vehicles.
Like.
Oil companies.
Like.
Internet-related companies.
Like.
Artificial intelligence.
Like.
Brick and mortar shops. Retail stock.
Don't
like that?
Don't like.
Pharmaceuticals.
Like.
Okay. So basically your thesis, if I understand from what you just like and dislike, is the Internet of Things is coming. The pandemic has created a need for internet companies, and pharmaceuticals will benefit as well from this recession.
Yeah, and by the way, the reason I like oil is because there's no way it can be replaced overnight. It's going to take decades, but it will be eventually replaced, as we all know. It's just a matter of when.
Well, don't you think oil companies are investing a lot in renewable technology as well?
I think they probably are, but they're also investing in cleaner oil, cleaner use of carbon in a cleaner way. That is a better transition than just cutting it all off. I mean, if you cut it all off, we won't be able to fly around the world anymore. So obviously, it's not so simple. And then you have plastics industry. You have a lot of things that use oil that are critical for our economy.
Okay, let's talk about funding for new businesses now. Let's first talk about where entrepreneurs right now are getting funding from, and then we can talk about StartEngine and what services StartEngine provides in this field.
Well, until the Jobs Act, which came out in 2012, entrepreneurs went to venture capitalists, angels, wealthy investors to receive capital, and sometimes friends and family, but that didn't go as much as they would like. So that was the status quo. And with the Jobs Act, introduced a new idea of equity crowdfunding, where you can actually raise capital directly from the general public on a platform like StartEngine. And that is a brand new way. It's an alternative way to raise capital.
Okay. Can you walk us through the process here? Let's say I were, a new business. Let's say I have an idea that I come to you, Howard, to say, hey, here's my idea. I need funding. How does it work now? What's the next step?
It's pretty simple. We have a very simple application. It takes 5 minutes to fill out, and then you just send it. We review it. We get on the phone. We ask questions. If it works out that the company has the ability to raise capital, then we will do a series of legal review, and then build a page. We help the company build a page, and that page gets posted on StartEngine, and then they start their campaign. And with the campaign comes a lot of marketing to their users, consumers, friends, family, anybody out there who would be interested in being an investor. The average investment on StartEngine is a little bit over $1,000. So, and a lot of them use their credit cards when they invest. So I think there is a very, I would say, impulse investment feeling when people come on StartEngine. They read about the company, they look at their financials, they try to understand what the entrepreneur is trying to achieve. There are a lot of people who comment on the page back and forth. That creates a community of discovery on new investment opportunities.
So most of this is just equity investment. How much do you think investors or entrepreneurs are how much are they levered right now? Because going back to that chart, let's take a look at the new business applications right now. I wonder how they're getting the money to start a business in this environment. Do you think it's their own capital? Do you think it's debt? Do you think it's money from the government?
But typically, small business goes after debt because they can get it by borrowing money on using their own, I would say, personal wealth. That could be a second mortgage. That could be borrowing from a bank, getting a line of credit. That is pretty typical. However, it's risky because if the business doesn't perform, they still owe the money, and that creates a lot of pressure, a lot of anxiety for entrepreneurs. Our view is, why not go on an equity crowdfunding platform and don't go and borrow the money, raise the money from the consumers. If your pitch to the general public is well received, you will raise money, and that money that you will raise will allow you to start your business. And it's not that cruel, because if and when the business fails, you don't lose everything. So our view is permanent capital, which is equity, is actually a good thing. But until now, it was very hard to get unless you knew people, unless you knew wealthy people, and you knew the VCs, and you knew how to go about it. You had the right pedigree. We see now extraordinary businesses who I think will be great businesses on StartEngine, that are run by minorities, they're run by women, by America, but basically the demographics of our country. And these people are receiving capital, and they may not get the capital other ways. This is a way they can get it.
How do you explain to the layman, to the retail investor, what constitutes, or what the factors of success for a new business are? Because, as you know, not all startups eventually become successful. So how do you weed out the winners from the losers and pick the right investments? Let's say I go on StartEngine, I see a bunch of companies. How do I pick the one that that you think is going to be the most successful?
Well, that is a great question, because that is what venture capitalists do. They make bets. In terms of most venture capitalists, half of their portfolio go to zero, and only 1 or 2 of 10 become successful. And I think that's true too on a platform like StartEngine. There will be many who will not succeed, and some will. And I think for an investor is to build a portfolio that is 5 to 10 companies a year through their investments, in a portfolio that they watch. And frankly, which one will do better than others is very hard to predict. Very hard.
Yeah. Well, let's take a look at this chart now. It shows retail sales from the Federal Reserve, data from the Federal Reserve Bank of St. Louis. Now, this is a very interesting chart. We talked about this again offline. Massive V-shaped recovery from this chart. We saw a bottom, and then fast recovery. Now we're back beyond pre-COVID levels. So I don't know if this indicates that consumer spending is still well and alive, but certainly that amongst retail sales, there's still demand for consumer products. Do you agree?
Yeah, absolutely. I mean, again, people are at home, that is true, but they still also go out and buy food, and they also still shop for clothes. Maybe not the same kind of clothing they were wearing at work. Maybe they have a little bit more casual perspective at home. But I think the behaviors of consumers is the same as it used to be. You still need money to spend money. So I think some of the programs like the PPP program and the Treasury money that was sent to consumers helped a lot. But ultimately, I think we can't underestimate that our economy was doing extremely well prior to the pandemic. It had a lot of momentum. That momentum still was, that pressure still carried forward.
Okay. Now, what kinds of companies then are you expecting to be listed on StartEngine? Are you expecting things to ride this trend that we're just talking about, this consumer spending trend? So more consumer services, or are you expecting technology companies? What types of services are you anticipating?
Well, I can tell you, we do publish an index every quarter, and what we saw is that the food and beverage was our #1 category on StartEngine. You know, distilleries, breweries are extremely popular as a consumer, and second is technology, green tech, agri tech, all of these different tech areas, artificial intelligence. it's fintech, financial technology, which we're a fintech company, has tremendous amount of appetite from the consumer. So I think one of the benefits for the consumer when they come on StartEngine is they discover those new companies that are potentially the next generation of great companies out there.
How difficult is it to start a distillery business or an AI business or a fintech business? I'd imagine the barriers of entry are huge, right? These aren't easy businesses to start. It requires a lot of technical expertise and capital.
Right. It's difficult, but understand this. It's not unsurmountable difficulty. What we have found is that if you go exploit a niche, if you're very niche oriented at the beginning, it's actually not that expensive and not that difficult to start a business in a segment. But if you're trying to be too wide, too big, too soon, it's usually one of the signs of failure. So exploiting a niche, if you are a brewery that is in a community that is very well explained, very well described on the offering page, then I think you'll see a lot of capital coming in, and that will help build that niche further, step by step. We see that with a lot of companies on StartEngine. They start small and they start building.
Is there a minimum investment required for StartEngine?
Yeah, we have some companies that are as low as $100 minimum investment, but typically it's around $300 to $500 the minimum investment. It's very approachable for most people in this country.
So can you explain the difference between this and venture capital? How is this different from, let's say, a Series A?
Okay, so venture capital, again, it's institutional money. They have money from pension funds and endowment funds, and they place the money and they get a carry on the money. So there's a lot of intermediates between that money and the entrepreneur. In our case, it goes direct. This is a direct entrepreneur to consumer. The consumer puts the money directly into the company. The biggest difference, I would say, is that the consumer has an involvement directly in the companies they choose to be with, and they can follow the journey because our companies place updates constantly on the page where they can explain to the consumer how they're doing, and they have to file their financials either every 6 months or every 12 months, depending on how much money they raise. It is incredible to see the reaction from consumers, and we have hundreds of thousands of people on StartEngine, and how they look at companies. I'm fascinated every day when I see a company start performing, and it's really exciting to watch entrepreneurs get the capital they need.
Finally, Howard, if you put yourself in the venture capitalist shoes right now, and if you were to evaluate all the companies coming in to your platform, looking at your experience, what were some of the common characteristics of startups that have outperformed?
I would say it's usually the CEO. The personality of the CEO is critical in this whole process. Is who are they? What do they want? What's their mission? And one thing I didn't mention is that on October 30th, we launched our secondary platform. So not only our consumers can invest in these companies, but soon down the road, they will be able to trade those companies early, not wait 5 to 7 years like the VCs wait. VCs typically calculate their fund to a 10-year horizon. But here, you could do a year or less horizon when you invest. And that, I think, changes the thesis completely on investing in private equity. The only company right now trading on our platform is ourselves, because we're the first to trade. But soon, we are going to be announcing other companies who will be trading as well.
Can you elaborate a bit more on the CEO characteristics that you found to be successful?
Well, there's three factors. First, it's a CEO who's willing to put themselves out there, very aggressively market their company and themselves to the general public. Number two is a well-defined audience, very clearly who are they targeting. And the third one is a compelling offering. Compelling could be green tech, AI, whatever is compelling to the general public. Those three factors make or break an offering on StartEngine.
Final advice for entrepreneurs watching the show right now?
My advice is never quit. Never quit. Go get the capital you need. Keep getting the capital you need, because you may want to pivot. You may not want to pivot your company, but never quit. You will succeed at the end. And the ones who are seeing this as a longer term opportunity will be successful. And capital is probably one of the most important factors. And that's why I myself and my business partner, Ron Miller, we created StartEngine for that purpose, so that entrepreneurs can achieve their dreams.
Well, thank you very much, Howard, for your work, and thank you for coming on the show today with Kitco. Appreciate it.
Right. It's a pleasure. Thanks for having me.
And thank you for watching. I'm David Lynn. Stay tuned for more.